I'll kind of just dive into what I'm looking at in the quarterly chart for Bitcoin. Go to Coinbase, maybe not Coinbase, just because I have my active trades up. Just look at Bybit. So yeah. Anyway, on candlestick formations, on the quarterly chart, I really don't pay that much attention to them. I really don't. I don't. Because you might look at this and you might think, well, man, that doesn't look good. Um, or
This
any.
looks as recumulation. You had price expansion from 2020. Now you have price pause, and this looks like a recumulation.
Yeah, I mean it does, but that depends on your bias. I mean, you could look at this, and if you're bearish, right, you're looking at this as like a shooting star. So it really comes down to like, and this video will kind of tie into my thoughts on candlestick formations, and it's kind of like what we talked about earlier in the Discord. I don't like candlestick formations because I think that the close of the candle, in most cases, is kind of arbitrary and represents a point in time that isn't really that significant. And all the candlestick formations are based off that arbitrary point in time and all the formations. So it kind of creates a scenario where like I just don't know how much weight I put to them. Uh,
But question to you then, do you put emphasis if there's a full body close versus a wick?
yeah, I mean, I don't really, yeah, I don't really put so much emphasis on that. I mean, it's this is a full body close right here, right above these highs, right? I mean, is that a great place to get long? No. Is this a great
No,
place to get
let's
long?
go back to 2020. So let's say the body would have closed at the bottom. I think your interpretation of it would have been different. That yeah, this the 2020 gray candle, the big one.
If it had
There you
closed
go.
lower, not
Yeah,
really. I mean, I'm not weighing it that way. I guess the way to answer that is that I just don't attribute the same significance to it that a lot of other people do. I just looking at price action, like, you know, um, as price action, right? As on different time frames, on multiple time frames. So when you look at price action across a broad spectrum of time frames, and you're looking at all the different swings on all those different time frames, then the close on one particular time frame, isn't as significant because of that. And that's kind of how I view the market. But that doesn't mean that, big closes above key levels aren't significant, especially when you're trying to identify a swing failure pattern. So I guess to answer your question, the time I want to pay most attention to closes is around a a key, a historic high or low that's pretty significant. Um, you know what I mean? That's really when I'm really paying attention to stuff like that. But yeah, again, I think this is kind of when you isolate one certain time frame's close at the exclusion of all others, it can kind of be a situation where you've already made a decision, right? You've already created a bias, and you're kind of just looking for something to validate that. Not to say that that's how everybody uses it, but that's kind of how I've caught myself using it, and try to steer away from that in the future. Now, the way I look at quarterly closes, the way that I look at it as significant is that um, we'll just mark these off, right? So essentially, you have your quarterly close. What you have, this one starts January 1st, October 1st, July 1st, April 1st. So we'll go into the daily chart and mark those off. So you have uh, January, well, December 31st, then you have October 1st. Um, well, actually, it would be the day before, right? To close. And then you've got July 1st or the last day of June. And anyway, this will be significant. So I just want to make sure to mark this up because this does have big impact. And then we'll go back and we'll do one last one, the last quarterly close back here. All right. So the way I kind of interpret these quarterly closes is that I'm looking at them as the area where um, the trend matters the least, right? We can kind of get caught up in like trend trading, and it seems like the superior form of trading, and in a lot of ways it is, especially in like a wild bull market. Just trade the trend. But sometimes we can, especially when different time frames are trending in different directions, then it can kind of go in different directions essentially. But so basically, when I look at these like quarterly closes, I'm looking at them and I'm saying like, okay, this is the area in the market where the trend actually matters the least. And the reason for that is because, around these quarterly closes, that's when you get like, institutions taking profits, institutions changing their positions around. And this is kind of what people like wanted in Bitcoin, right? They wanted institutional involvement, and they've started to get it, and institutions have become more and more involved in the market. And you can see their signatures in the market. They leave these footprints, and as you get more institutions involved, they're looking at quarterly statements, right? They have to present to their board of directors, your quarterly profits for first quarter, second quarter, third quarter. And generally the board meets every 4 times a year, and generally what they're looking at is quarterly earnings and quarterly profits and that type of thing. So these quarterly closes are very, very significant from an institutional perspective. And it's a sign that they're getting more involved. But how to use that on a practical level, it's kind of an area where um, you know it can serve as a pivot on the market or a stop and reverse point. And it doesn't always have to do that. I mean, here obviously the trend continued, so it's not like it always serves as a stop and reverse point. But it is an area where you know I don't want to put too much weight on the trend, because in a situation like here, right, you know price comes down, it's in a downtrend, and you know you get the quarterly close and price reverses immediately, essentially. You get a similar price distinction here, right, where you have this pretty massive downtrend established, then you get your quarterly close, and price just lower for a little bit, but you know right before going into a massive uptrend that is contrary to the previous quarter. And then if we go back here, of course, you have this quarterly close here, which is essentially you have this massive, massive uptrend, and this quarterly close basically represents the end of the uptrend. I mean, you have a little bit of peak up on this candle here for a swing failure pattern, um, but most of this quarter is absolutely directly contrary to what happened in the previous quarter. And that's kind of a good example of how these areas can serve as like stop and reverse points. Uh, anyway, that's kind of like the main thing I'm looking at when I'm looking at quarterly closes. And it's an area in the market where I'm generally, if I've established a bias, leading up into that point, it's kind of the time of the year, or the time when I want to take a step back from whatever bias I've established and maybe take a break from the market, because whatever trend that's occurring during that time, it doesn't hold a lot of weight, and a new trend can establish very, very quickly after that quarterly open. So really, I mean, the if you think about trading in a ratio of stress to money, those present the best opportunity trades, right? To get aligned with those quarterly moves. A lot of people think about trading in like, just purely how to maximize the amount of profits you earn. But if you think about it in, from the concept of that money to stress ratio, uh, a lot of times catching that, that new quarterly movement that's established after a quarterly open, and then just sitting on that can be probably, a very stress free trade and a very relaxing way to trade the market. And it's the type of trading that you can, have another profession and still interact with the markets and still interact with the markets in a really profitable way. So a lot of people would, find that useful. And maybe you're a grinder and you like to be in the market every day, but even if you are, it's still helpful to, establish those types of positions, even as a hedge to some of the other stuff you're doing. Anyway, I'm going to put a pin in that video real quick.